Hello, I would like to review for this week of February 2nd towards February 6th, 2015, the markets and eventual trade opportunities. So first, let's start with last week. So last week was pretty heavy and pretty active. Gold, unfortunately, didn't allow us to catch it closer to 1,320. I was pretty sure that it would go up there because of the Greek elections, and so it started falling. I think we still have an opportunity to short it here, but next week we have NFP numbers, and if they are really bad, we could see a breakout here. So this time, if we want to short gold, we have to be careful about the NFP numbers on Friday. So if you have good numbers, it's possibility also to short gold, whatever its level. USDCAD. So what happened is we had in fact, the USDCAD, from the point of view of our one of our specialized instruments called AUDUSD, is extremely high, even on daily level. On weekly level, as you can see, it's starting to become high, but on daily level is extremely high at around 97%. So usually when we get so high with the AUDUSD 2.0, we get a correction. So something will correct here in the very near future. Still, if you look at USDCAD, we were looking at short positions, but unfortunately we got very big spikes in this currency pair during last week. So this was an opportunity to make money here, really. So unfortunately it was really difficult to trade. So today we have basically an uptrending channel with center today around 126.40, 126.50, and I think one can safely short closer to this area towards the center of this channel that you can see. You can plot it yourself. It's not very difficult. So USDCAD is going to be very interesting next week because we have two differential data. On one hand, we have bad economic data on the Canadian front. So the GDP contracted by 0.2%, but on the other side we have US data that's starting to look bad as well, since we had growth of 2.6% in this quarter. So let me have a look again. The data, US, so the fourth quarter of 2014 we had 2.6% growth. So the price index went down, which is also pretty bad. So these are bad signals. Okay, we have positive signal for the Chicago PMI, but it doesn't change this. Okay, it can be artificial because the imports, the value of the imports being reduced somehow impacted the GDP, but to be honest, I think the market is reading this negatively. So on Friday, when we'll get the numbers, you could have some easy trades here. So if for instance we get positive numbers on the unemployment side for Canada and negative numbers here, then you should really short USDCAD. If you see positive numbers for the non-farm roll, for the NFP numbers, and you see negative numbers on the Canadian front, then it is rather a short of the Canadian dollar and a buy of the US dollar. So both ways. Of course, I wouldn't try to break this channel. So if the price is already at 128, for instance, just before the release, I wouldn't, and we have something bearish for the Canadian dollar and bullish for the USD, I wouldn't buy it. If it's in the middle of the channel, then we have a good chance that we'll get to the upper side of the channel and even possibly above. So you have to be very careful this week. So this technical trade is not obvious. That's for USDCAD. The real important information globally is that the dollar has shown its first weakness due to these numbers. So I am very carefully going to be looking at the ISM manufacturing data. Why? Because one big difference between the non-farm payrolls is that these are lagging indicators. So well, GDP is very lagging. Non-farm, the employment data is not as strongly lagging, but still, the real future is more in the PMI numbers. And if you get ISM manufacturing that is bad on Monday, then we have really to start worrying. So if, for instance, and it's now going down. If you look at the trend, the last point, so we were closer to 60, now we are closer to 55. That's why we will be very careful here. So if we have a negative number here, that means the USD is starting to be bearish, and this will certainly play. This will certainly be reflected somewhere in the economic monetary policy of the Fed, and it will come out in the employment data sometimes later. So, but the markets usually react more strongly to the NFP numbers, so you have to be careful about this. If you have both of them negative and bad, both the ISM and the NFP data, then it's very bad for the dollar, and it's really very bullish for shorting the dollar, for instance, and buying the sterling, buying the as I said, CAD could be a buy against the dollar. In fact, we have another one that could be a buy, that is the New Zealand Kiwi, which is very resilient. The Kiwi is now going towards 0.71. So I think here we have really a good opportunity to buy this Kiwi. Of course, the situation is not very good for the Kiwi, and we will also have some important data releases on the Kiwi front. So if you see that the data here is positive, you should look into buying the Kiwi against the dollar, provided that we have some further information, negative information on the dollar side. So you basically have to interpret the data. Regarding the AUD decision, if I expect we'll get a rate cut, and I think you could, if you come back to the charts of the Australian dollar, we are not, we've already fallen quite a bit. So I expect here you have to be just to follow the trend. So just as soon as you see on 4-hour chart a close below 0.77, or maybe even during the decision, if you see that there is a rate cut, you can just enter short. I think we'll get something like 200-300 pips move. Possibly we'll see 0.75. I wouldn't try to buy here if you have a rate cut. I wouldn't be surprised that we have something like a trend breakout, like happened in the Canadian dollar. This is regarding the RBA. Regarding the BOE, I'm starting to be bullish on the sterling. I think it's the best play, one of the best plays against the dollar if the dollar is starting to weaken. You could wait for a new high. So first thing, you could try to buy with a tight stop loss before the decision. Not very safe. Or you could just wait for a new high above, either above 152.20 or above 152.70, and then you could start buying the sterling. So these are both options. The buying above 52.70 will give you a bad stop loss, so you'll have to take it somewhere around these levels. So you could use the trend line indicator and proactively just simply buy it. Let's have a look on the trend line. So if we take the sterling, as you can see on daily, we have already switched into positive territory. We have a doji here forming, and we could try to buy. So as soon as we get a 4-hour chart trend changed to positive, you can try to buy. Probably the stop loss will be somewhere here, so you could take 149.89 as a stop loss, or you can simply buy it with a stop loss here. Given the fact that we have so much data that is important, it's going to be pretty difficult. I think it's not very wise to enter blindly almost. So we could have next week contradicting moves, so erratic behavior. So for instance, if the ISM data is negative, you will have a spike towards upwards here, closer to the resistance. But then if the NFP numbers are good, you'll have some consolidation. So you have to read the news next week. There is no way around it, unfortunately. Also, this is very important. The PMI, the Chinese PMI, is very important for the Australian and the New Zealand dollar next week. What else? Yes, I think yes. A few words about the yen. The yen is very interesting now, so I wanted to share with you with this chart. So basically I've built here some trend lines. Currently we see the yen is stuck is in a trading range. This is a very clear and cut trading range with basically slightly smaller highs. This typically is a downtrend pattern. In this case, so it has a higher chance of breaking to the downside. And one of the questions is how deep will it go to the downside? So in fact, if you look at USD yen, after it went on a uptrending channel from these areas up to here, it started correcting, and now we are in a downtrending channel. We found support somewhere here along this trend line channel. So if you take this bottom, and we draw it together here, we get that this is very close to this area. And basically the yen is preparing to come back to its previous speed of depreciation. So I guess, and I remember you again that we have in this place a gap here, just here. So my expectation is that we see a breakout to the downside, and we will enter back into this channel, and we will go visit at the middle of this channel in the coming week or two, maybe 3. Possibly I expect that we will close the gap, so maybe we'll go as low as here. This is difficult to say, it will depend on the news as well. But also this is going to be very dependent on the ISM data and the employment data. So be very careful. You have to trade the news basically again. So technically speaking, if you want to enter this trade, you wait for a 4-hour chart closure below 117.30, or maybe to be more accurate 117.20, and you short with a stop loss around 117.90, so something like 100 pips, and then your target is to get to this area. Then you have to manage your exit point yourself. This is maybe the last opportunity that we'll have next week. In fact, maybe from some point of view, the lowest risk if we have a fall. So we'll have a heavy week from point of view of fundamental news. I really think you should read very carefully the economic data and trade accordingly. All these recommendations are basically conditional to fundamental data. So this is from last week. That is it for this video. Have a nice trading week, and I hope you'll make money all together.